Today we're going to the capital of Arkansas, Little Rock, where the apartment sector's performance has been a near mirror image of the national averages. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Little Rock update. The apartment market in Little Rock has performed nearly in line with the U.S. norms. Exhibit A, occupancy rates. Take a look at the U.S. overall numbers. As of 1Q, occupancy is at 93.5%, up 0.7 points annually. In Little Rock, occupancy is at 93.5%, up 0.6 percentage points annually. Pretty much the same story. Exhibit B, rent change. For the U.S. as a whole, the apartment sector saw same-store annual rent growth of 3.3% in the year ending March. For Little Rock, annual same-store rent growth of 3.3%, exactly in line with the U.S. norm. So for this quarter, Little Rock wins the award for being most average. How did it get there? Let's take a look at some occupancy numbers. Look at this chart here. You see that occupancy is back in line to where it was at the beginning of 2009, 93.5%. Occupancy here fell very briefly below the 90% mark, and it's seen a little bit of seesaw action since then, but certainly trending upward. And to go back to our storyline on being similar to the national storyline overall, you can see that in Little Rock, we have much higher occupancy rates at the top end of the market. And if you've been watching these programs for a while, you've heard us talk about this continually for many metros across the country. You see, in Little Rock, we have occupancy rates of 95 to 96% in apartments built in the 2000s, the 1990s, and the 1980s, but much weaker rates around 89 to 90% in apartments built in the 1970s and earlier. And many of those developments are located in the central Little Rock area. Let's take a look at some trends on the pricing side. Here's a chart showing quarterly same-store rent change by quarter. And you can see that after some cuts in 2009, we have now had quarterly rent growth in 4 of the past 5 quarters. We told you earlier how Little Rock achieved annual rent growth of 3.3%. And you can see a lot of that came just in 1Q as same-store rents climbed 1.4% between December and March. Let's highlight a top-performing submarket for you. West Little Rock, Saline County. This includes all of Little Rock proper west of Interstate 430 and also includes the southwest suburban area of Benton, which happens to be the hometown of Cliff Lee, Billy Bob Thornton, and Charlie Rich. And they would be proud to know that their submarket leads the metro with an occupancy rate of 95.9%. That is up 0.7 points annually. And West Little Rock, Saline County also leads the metro for annual rent growth with same-store rates up 4.1% in the year ending March. Look at the year ahead. It's always hard to forecast the path of these smaller markets like Little Rock, but there's certainly some nice things going on in the economy, and that should bode well for the apartment sector. Little Rock gained nearly 6,000 jobs in the past year. That adds up to growth of 1.7%, and that is actually better than the U.S. average of 1.1%. So in that important statistic, Little Rock is actually better than the U.S. norm. That wraps us up for Little Rock. Until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.